This is Daniel, and you're watching Unrivaled Investing, your guide to finding exceptional companies and unrivaled investments. So, what is this? This is not day trading where you're looking to make a couple percent, or even swing trading where you maybe make 10, 20%. Here, we're looking for those exceptional companies, companies that can make hundreds or even thousands of percent over long periods of time. So, follow me on this journey to find these exceptional companies by subscribing to this channel or going to unrivaledinvesting.com. The goal of this introductory video is to help you tackle the heart and soul of investing. What is the trillion-dollar secret to building wealth in the stock market? No, I'm not saying you can become a trillionaire or even become a billionaire. What I am asking is, if the stock market has created trillions in value over the last few decades, how do you get your share? So to answer all these questions, we have to jump back to 2003. You have young 17-year-old Daniel standing next to Charlie Munger, where I go, "Hey Charlie, how do you get rich?" But first, who is Charlie Munger? He's a goat. Bah, no, not that type. He is the greatest of all time. He previously ran a hedge fund, and from 1962 through 1975, he compounded at 20% annualized. That results in about an 1,100% return for his investors versus the broad market, which was only up about 5% annualized, which is about 100% upside. So 1,100% upside versus 100% upside. That's why he's a GOAT. Since then, he partnered with Warren Buffett, that's a name you probably recognize, to help build Berkshire Hathaway, a company that's literally worth hundreds of billions of dollars now. Think of all that value creation that they've done in the last few decades. So what was Charlie's answer? Charlie's answer was that he didn't know how to do it quickly. There's no successful get-rich-quick scheme, but you aim to incrementally get better day by day. Day by day, spend less than you earn. Day by day, invest in yourself, improve your skill sets, and look for opportunities. There won't always be great opportunities, but if you prepare each day, someday, over a long enough time horizon, there will be an amazing opportunity for you. Since then, I've spent the last 2 decades studying the world's best investors. Charlie Munger, Warren Buffett, Peter Lynch, Stanley Druckenmiller, David Tepper, Michael Burry, Joel Greenblatt, countless investors that all were immensely successful in their own ways. What I've learned from these great investors, I'm going to distill into a few universal truths that can help us answer what is the trillion-dollar secret to creating wealth in the stock market. So before we continue, let's recognize that not everyone is in a position where they can think about unrivaled investing or stocks that can go up thousands of percent. They're focused on their next meal. And so in that spirit, 100% of the advertising revenue from this video is going to go to charity. So please make an effort right now to click like, subscribe, comment, so that way ultimately more people can see this. There's more advertising revenue that can go to charity. Thank you. So let's dig in. How do you make money in the stock market? There's actually only 3 basic ways, 3 universal principles that make you money in the stock market. What's the first one? The first principle is dividends and distributions. What is that? That's cash that a company has or assets that a company has that's distributed to you, the shareholder. That's the first way. What's the second way? The second way is fundamentals, where a company is expanding. It can either be expanding their top line, meaning improving their sales, or it means they're expanding their bottom line, their profits. Then the last way is valuation. What's valuation? Valuation is a traditional metric that you use for valuing the company and the future cash that they'll generate. Typical metrics are like price to sales or price to earnings, price to free cash flow. Those are the metrics that try to get a ballpark for how much cash this company is going to generate in the future. Let's go through some examples of how this works. Imagine you have a company that generates $5 in earnings, and it trades at 10 times earnings. The 10 times is the valuation. The company is worth $50. Now let's go through a few different scenarios involving this company. Let's jump 5 years from now. Earnings double, but valuation stays the same. In that case, you now have $10 in earnings and the same 10 times multiple. The stock is now worth $100. So you've had about a 100% return from $50 to $100, or about a 15% annualized return over 5 years. This scenario was entirely driven by fundamentals. So let's lay out another scenario, once again starting with the $50 starting valuation. Imagine 5 years go by and earnings are stagnant at $5, but the multiple doubles to 20 times. The stock is, once again, at $100, or about a 15% annualized return, this time entirely driven by valuation. So here's where it gets interesting. If both the earnings and the valuation double, you don't get 200%. You get 300%. So I can walk you through the math. It goes from $50 valuation to $200 valuation. If you look back over the last 50 years, how much of a return could you expect by owning a broad basket of US stocks? The answer is about 8-9% a year. Of that, how much comes from the components we were just talking about? The answer will surprise you. Dividends were about 2 to 3%. Fundamentals, 5 to 6%. Valuation, about 0. So all the noise you hear around, I think this is cheap, buy, or this sector is a real bargain, over a long enough period of time, it all washes out and matters very little relative to the big drivers of fundamentals, which is the vast majority of your gains. First, this leads to a few really important conclusions. Like 1, there's real downside to focus exclusively on dividend investing. All those dividend aristocrats, if you're focusing on making 2, 3, 4% a year from your dividends, you're missing the much bigger piece. What if the fundamentals of the company are actually struggling or getting worse over time? Because ultimately the value of a company comes not from what they did yesterday, but where are they in 3, 5 years from now, 10 years from now? Dividend and dividend yield doesn't capture that risk. The problem with valuation is that you can overpay. Let's take Microsoft, for example. Let's go back to 2000. 2000 it peaked, or 1999 it peaked, and then by 2002 it was down like 40% from its peak. It was trading at 60 times earnings, which was pretty lofty even though it was still down 40%. 60 times earnings, which means it prices in a lot of growth in the future. Over the next decade, do you know what Microsoft did? It compounded its earnings at 15% a year about. That means that over the next decade, from about 2002, 2003 to 2012, Microsoft earnings went up by 4 times. Yet, as an investor, you know what you did? You pretty much went nowhere. The reason why is because the valuation came down by 75%. So on the one hand, earnings went up by 4x, your valuation came down by 75%, which washed itself out. So even if you find a great company that's going to grow a lot in the future, if you overpay, it will act as a weight and hold down your company's returns over time. If fundamentals drive the bulk of my investment return, how do I ensure that I find a company with good fundamental growth in the future? You have 2 components. You have sales and you have earnings. Earnings are fairly straightforward. You can either cut costs or raise revenue. If you're raising revenue and keep costs the same, your profits will go up. If your revenue's flat and you cut costs, your profits will also go up. That's earnings. The second component is sales. It's units times price equals revenue or sales. So if you want to be able to increase your sales, you need to either sell more units, sell more hours, or raise your price. But how do you sell more units or raise price? That is the trillion-dollar secret that builds wealth in the stock market. The answer is you must have an unrivaled value proposition. What? What is an unrivaled value proposition? It's where a company offers a good or a service that you can't get anywhere else. So what happens if you don't have an unrivaled value proposition? The answer is companies have a full spectrum. On one side, you have companies with this UVP, this unrivaled value proposition. On the other side, you have companies that are very rivaled. It's a commodity. What happens with commodity companies? It's fairly straightforward. Look at oil as an example. Oil producers, they're all commodities. One day they're selling at $100 a barrel. The next day it's at 0. That's what happens when you have a rivaled company versus an unrivaled company. An unrivaled company has the right to win. They will increase their sales or prices every year because they're unrivaled. Using that mental filter, find those unrivaled companies. That will get rid of 95% of the investment universe that you're looking for. But it's not just companies, it's a life approach. You want to align yourself with an unrivaled value proposition wherever you can find it. So for example, if you need to work for a company, you want to find a company that has an unrivaled value proposition and is growing. If the company doesn't have an unrivaled value proposition, you might struggle, the company might struggle, you might work really hard, but if the company blows up, that doesn't do you any good. If you find a company that's unrivaled, they're going to grow. As they grow, there'll be more opportunities for you to grow. So, unrivaled value proposition. That's where the name of this channel comes from, Unrivaled Investing. We're looking for those exceptional companies, those few companies with an unrivaled value proposition, which gives them the right to grow long term, which is ultimately what drives your investment returns long term. That fundamental piece. I'm focused on unrivaled investing, and you should too. If you go to my website, unrivaledinvesting.com, you'll find the following. Unrivaled Journey, where you can track my personal financial journey as I seek companies with an unrivaled value proposition. This website is appropriate for people looking to manage their own investments themselves, but want to follow what someone else does for the price of a cup of coffee. Or there's Unrivaled Capital, which is my investment advisory firm that manages high net worth client assets. So if you enjoyed this video, please like, subscribe, or comment. And if you're interested in finding exceptional companies, go to unrivaledinvesting.com to follow the journey. Thank you for watching.